Warren Buffett's $114.5 billion wisdom, the only 7 investment rules you need. This man bought Coca-Cola's shares for $1 billion in 1988. Today, his investment is worth over $21 billion. That's a return of over 2,000%. It's insane. Hey, fellow investors, today we'll talk about the wisdom of Warren Buffett and the investment rules behind $114.4 billion wealth. Welcome back to Pengellins, where we bring you the best financial advice from the world's top investors. Today we're diving into the mind of the Oracle of Omaha, Warren Buffett, one of the most successful investors ever. We'll cover investment strategies that have proven to be incredibly effective. So grab a coffee, let's explore his top 7 rules for investing success. Before going through the rules, subscribe to this channel if you want to see more financial and investment tips. Let's start. Rule 1, never lose money. Warren Buffett's first rule of investing is simple yet profound. Never lose money. This rule emphasizes the importance of investing in stable, reliable companies rather than taking unnecessary risks. Remember, the goal is to grow your wealth steadily over time, not to gamble it away on risky ventures. As Buffett says, rule number 1 is never lose money. Rule number 2 is never forget rule number 1. But what does this rule really mean? It's not about avoiding losses entirely. That's impossible in the world of investing. It's about minimizing your potential for loss. This means conducting thorough research before investing, understanding the business you're investing in, and being confident in its long-term prospects. Rule 2, educate yourself about money and investing. The second rule of investing is to educate yourself about money and investing. Buffett emphasizes the importance of acquiring knowledge and understanding the financial world. He believes that the more you know, the better decisions you can make when it comes to your investments. This way you gain a deeper understanding of financial concepts, investment strategies, and market trends. Buffett suggests reading books, attending seminars, and staying updated on financial news to expand your knowledge base. So stay tuned, as we have a bonus for you at the end of the video, the list of books Buffett advises to read, the books that made him a billionaire. Rule 3, start investing early. Now let's move on and talk about the advice Buffett mentions regularly during his interviews and public speeches. Rule number 3, start investing early. The earlier you start, the better your chances of building wealth over time. Starting early allows you to take advantage of the power of compound interest. But what is the compound interest? Compound interest is the concept of earning interest on your initial investment and the accumulated interest over time. When you start early, even with small amounts, your investments have more time to grow and benefit from compounding. Buffett often uses the metaphor of a snowball rolling down a hill to explain the impact of starting early. The longer the hill, the larger the snowball becomes. Similarly, the longer you stay invested, the greater the potential for your investments to grow. From this advice, you can clearly see that it's your perfect time to start investing, no matter the amount of money you have in your pocket. The earlier you begin, the more time your investments have to grow and multiply. Rule 4, avoid betting on individual stocks. Moving on to the next rule of investing is to avoid betting on individual stocks. Buffett strongly discourages the practice of stock picking, which involves trying to predict which individual stocks will outperform the market. This strategy can be risky because it puts all your eggs in one basket. If the company you've invested in underperforms or goes under, it could significantly impact your entire investment. Instead, he advocates for diversification, spreading your investments across a broad range of assets, sectors, and industries. This strategy reduces risk by ensuring that your portfolio isn't overly dependent on the performance of a single stock. Rule 5, utilize dividends. The next key rule of investing is to utilize dividends. A great investor recognizes the value of investing in businesses that consistently provide dividends to their shareholders. For those who are new to investing, dividends are a portion of a company's profits distributed to its shareholders, and they serve as a tangible return on investment. By investing in dividend-paying companies, you can generate a steady stream of income from your investments. What makes dividends even more powerful is the concept of dividend reinvestment. Instead of cashing out the dividends received, you reinvest them back into the same stock or other investments. This reinvestment allows you to purchase additional shares, which in turn can generate more dividends. Over time, this compounding effect can significantly increase your investment returns. Hey, love what we do? A thumbs up to this video would be incredible. Rule 6. Buy high-value stocks at a low price. Warren Buffett's sixth rule of investing is to buy high-value stocks at a low price. This rule emphasizes the importance of identifying undervalued companies with strong growth potential. Buffett believes in the concept of value investing, which involves finding stocks that are trading below their intrinsic value. The key to implementing this rule is to conduct thorough research and analysis to determine the true value of a company. By identifying stocks that are priced lower than their actual worth, you have the opportunity to maximize your investment returns. This strategy aligns with Buffett's approach of seeking out quality merchandise at a discounted price. This strategy not only provides the potential for capital appreciation, but also reduces the downside risk. It allows investors to capitalize on market inefficiencies and take advantage of opportunities when others may be overlooking them. Rule 7. Invest for the long term. Buffett's next rule of investing is to invest for the long term. He advocates for a patient and disciplined approach to investing, focusing on finding quality companies and holding on to them for an extended period. Why? Investing for the long term, you align yourself with the underlying fundamentals of the companies you invest in. This approach allows you to benefit from the compounding effect of returns over time and reduces the impact of short-term market fluctuations. According to Buffett, you avoid timing the market or engaging in frequent trading, as it can lead to unnecessary costs and potentially lower returns. Instead, he emphasizes the importance of staying committed to your investment strategy and riding out market volatility. Do you want to capture the true growth potential of your investments and achieve long-term financial success? Develop discipline, patience, and a focus on the intrinsic value of the companies you invest in. All right, folks, as we promised earlier, it's time to share the bonus content, the list of books that made Buffett a billionaire. Ready to grab that knowledge? First on our list is Common Stocks and Uncommon Profits by Philip A. Fisher. This book is a treasure trove of investment philosophies that have stood the test of time. Next up is Business Adventures, 12 Classic Tales from the World of Wall Street by John Brooks, a fascinating look into the corporate world of the 1960s. Third on our list is Where Are the Customers' Yachts by Fred Schwed, a humorous and insightful critique of Wall Street. Next, we have Essays in Persuasion by John Maynard Keynes, brilliant insights into economic fluctuations and proposed measures. Moving on, we have The Little Book of Common Sense Investing by Jack Bogle, an introduction to the concept of low-cost, passive index funds. Poor Charlie's Almanac, The Wit and Wisdom of Charles T. Munger, edited by Peter Kaufman, chronicles the life and wisdom of Charles Munger, Buffett's right-hand man. The Intelligent Investor by Benjamin Graham, often referred to as the Bible of investing, teaches readers how to use value investing. Eighth on our list is The Most Important Thing, Uncommon Sense for the Thoughtful Investor by Howard Marks. This book provides valuable insights into the keys to successful investment and the pitfalls that can destroy capital or ruin a career. All these books with their links you can find in the description below. And there you have it, Warren Buffett's wisdom for investing success. Use these principles to navigate the world of investing with more confidence and potentially increase your chances of success. So what's the next action? Start. There's no better time than now. And remember, this is a long-term game. If this video added value to your day, pass it on, share the knowledge, and if you haven't yet, hit that subscribe button for more game-changing content. I'm curious, which rule made you pause and think? Let us know in the comments. Stay hungry. Until next time.